Good point. Thank you. If you think about a young person just being in university or about to really enter now the job market, what type of advice would you give that person and which ones should they ignore? I know you have in the brand university every 6 months people coming on the job market, but
Not to follow patterns you adapted to, cliches, imaginations, or daydreams or something like this, but to follow your own path or to find your own path. And if you dream of becoming employee, for example, of a famous brand company or something like this, do it as soon as possible. Try to be as independent as possible. Because you should never forget, once you are an employee of a company, they're paying you, most of the cases, for your time. So you're wasting time. And in case this is a company making profit, you are not participating in this profit. Shareholders and the owners are participating in the profit. And this is not an optimal situation.
so if I understand it correctly, you take this the complex financial world where we have a lot of different new terms and you break them into small video sessions so people can learn this knowledge. But how do I really learn them? You're an expert on this way of applied learning, but can you maybe explain how that works? Like how does my brain consume information and then replicates it by doing something properly so I can really say, okay, I learned the skill.
Listen, it all starts, the problem or the challenge starts with nowadays internet. You're sitting in front of your notebook. You already opened some kind of account, a depot, and one afternoon you sit in front of your notebook and you want to buy a share of a company. So what? Then you look. And as you have access to a huge amount of different financial markets and asset classes, stocks, ETFs, bonds, whatsoever, you name it, thousands of possibilities, tens of thousands of possibilities are bombarding you, and you have no idea what to do. Then you look, you're looking in the internet for experts or articles, tips, hints, and then the same is happening again. Tens of thousands of different opinions, at least hundreds of different opinions about a single share like Tesla or something like this. Buy it, don't buy it because, don't buy it because, hold it, stop, reduce, blah, blah, blah. You don't know what it means. What does it mean? Hold, reduce, upgrade, downgrade, whatsoever. You don't know which of these experts, analysts, whatsoever. You don't know what analysts are. You don't know the categories of people telling you to buy or not to buy. You have journalists, you have financial journalists, you have non-financial journalists, you have analysts, you have influencer nowadays, and you are no way able to decide whose opinion or recommendation is relevant and what not. So you have this situation, thousands of possibilities to buy and thousands of opinions to buy or not to buy. How do you deal with this? So it's like it's like a huge amount of particles bombarding you. And the question is how to find a way through.
Mhm.
And the quite simple answer to my opinion is you have to build a line from this four-dimensional space of information available, tiny fragments. You have to build a line, and this line is some kind of knowledge line. And what we try to do with this course is to build a line through this, let's call it jungle of information and jungle of possibilities. And that's
Mhm.
what I mentioned before. It's not about to have a pile of videos again, because then you would answer a huge pile of information and possibilities with a rather big pile, a growing pile of videos or other kind of content about learning. And this is not a solution. You can't solve the challenge of a pile with a smaller pile. And so the idea or the challenge and the best possible way to learn is to start from A, proceed to B, C, D, until you reach Z or whatever. To decide, to give a pass. And in the same way, a pass is always a kind of strategy and a method. You can walk through this jungle. And the longer you walk, the more experience you gain, and the better you will be to decide what kind of information is relevant and to decide who am I. One of the most important things, who am I? The first challenge you have to do also when it's about investing. And the longer you walk through this jungle following this path, the safer you are, the higher your competence, and that's the final mission, the better your performance might be. But that's the whole idea. And that's the
Mhm.
reason why it wouldn't make sense to have some kind of portfolio of course fragments or videos, and you you tell your friends and family and interested people. It doesn't matter with which video you start first and second and so that wouldn't make any sense. It's a pile again. I think that's the unique concept Investling tries to realize and to follow.
Yeah, because in the end, every student has to define their own personal finance strategy.
Yeah, there are no secret knowledge. There are no experts who know everything much better, and you just have to follow them. You have to find, as I already said, you have to find yourself. Like in this thousands of years old Greek saying, recognize yourself. I think it was written in the Temple of Delphi as a hint. You have to know who you are, what you want, what are your expectations, if they're realistic or not. And from this starting point, you have to start acting, not only within, of course, investing world, but in your whole life. That's my opinion.
Yeah. I mean, that it starts with like, what do I want? Do I want to retire with 40 or with 60? Do I want to have a house and a family? Yes or not? Because that differs a lot. And then you cannot say just follow the strategy of some famous investor because every person is different.
And especially, maybe the core question, the mother of, or the father of all questions, whatever. What's my relation to money? We all live, as long as we live in a society or a country or a culture which is based on money. Nobody can tell you that money is not relevant for him or her. Maybe they have a huge heritage or something like this. Then it's not a problem at all. But we're living in a money-driven, financial-driven reality, and you have to define for yourself what kind of relation to money do I have. A lot of people say, I want to get rich. Why? You have to ask yourself, why do I want to get rich? To be safe? To have a safe heaven until you die? Or to buy some Lamborghini every week? Or whatsoever? To have a luxury life?
Uh-huh.
And so forth. So really, in the first step, and maybe this question is a part of the question, who am I? What's my relation to money? Why do I want to have? Do I have enough money? Do I want or need more money? How much money do I need? And so forth. And if you cleared this up with yourself, then you have a good starting position.
Interesting. That the next point I see a lot is that we kind of need to have a certain amount of certainty, as little risk as possible, but of course, as much as returns. How can someone manage this certainty of, let's say, I analyze a company and I can see the numbers and even the products of Apple, how much they sell, how many people run around with an iPhone. But then the stock market is also about the future, and no one can predict the future. So, what do you advise someone just starting in this investing world to? Because that fear of like, I invest in something because I think it goes up, but then it doesn't. How do I manage that?
To my opinion and my experience, there are two parts of a solution, a combined solution. What are the biggest enemies within financial markets? Two sisters, fear and greed. That means emotions, strong emotions. And in most of the cases where people, both retail investors and professional, let's call it professional investors, fail, the reason for this failing is based on fear and or greed. So you have to manage your emotions. And you're talking about risk, reward, and the relationship in between these two aspects. And in between, there's always fear and greed sitting and haunting you, talking into your ear, something like this. So you have to manage this to reduce your emotional, let's call it emotional volatility or something like this. And the second, the rather rational aspect, my recommendation, but it's just my recommendation, to take a little bit of deeper dive into mathematics. What do I mean with mathematics? Exactly, statistics and probability. Because as you mentioned, you use the word believe. People believe that a company might develop quite well within the next couple of years, or a share of the company or whatsoever, or a prognosis. Belief is not the right perspective. Belief is somehow related to faith. Faith, yes, within religion or ideology or something, it's okay. But religion, both religion and ideology, do not have any place when it's about financial investing or something like this. So when you're asking about the future development of a company, you shouldn't ask what yourself or other people, experts, believe or what kind of prognosis they do have. You should watch it from a perspective of probability. How high is the probability in percent that this certain company develops in a positive way? You can't make some kind of prognosis like analysts do, the 12 months prognosis. Tesla now at 450 and in 12 months 600. It's nice. It's a calculation. It's a proposal. You can read it, but it wouldn't help. The main question is just it's simple. Is there a higher probability that it goes up or a higher probability that it goes down? And then it's about statistics. A lot of people think about looking back and they say, okay, company have been developing quite well within the last 3 or 5 years. And then they make this huge mistake or error. Take the past development and project it into future. It's subconscious, so to speak. Not purely subconscious, but it happens. It's my own experience of failing. You see a line, you see a chart. It looks like this. It has been looking like this the last 3 years. Most people, if you ask that they draw it, then they might draw it like this. But within a week, it could go like this. But our subconsciousness, and again, our greed in this case, and our hope, also not a good advisor, hope would tell us that this line proceeds as it has been the last 3 or 5 years. So, solution, mathematics, statistics, probability, and control and manage your mindset, and especially fear and greed and other big emotions.
It's great because it's a topic that where you have to holistically kind of hone your skills and learn new things. You are a lifelong learner yourself. Like just recently, you've completed a machine learning engineer degree, and I know you're interested in a broad range of topics. But if somebody wants to start investing now and say, I embark on this journey, I will learn the basics of investing, I will learn a bit about statistics and psychology, how can I develop a modern way of learning and making it a constant habit for my life in our busy 21st century lives? Do you have any ideas, hacks, or guidance that you could give so somebody says, okay, how can I keep and stay on track and not just buy the next course or book and then just let it rot in the corner and never open it?
First, quite often I can hear I can't follow this and that course about investing because it takes too much time. If you translate the sentence, people are telling you that they can't care for developing the competence that mid to long term would support them giving up the job they have to do that takes so much time that they can't participate in a course. So it's a little bit of a paradoxon. It's not very useful. That's one part. And the other part, and that's the reason how the courses and the modules in Investling look like this. Again, if you look at YouTube and other video-based channels, again, you see quite a lot of podcasts or something like this. They are not dedicated to learning, but about information that last 2 hours or 3 hours or even 4 hours. Who is able to participate in 2 or 3 hours? That's the point. It's macro. It's really huge chunks of videos of information, and it's not very helpful. The solution might be, to my opinion again, so-called microlearning. You have small units, you have small chunks that are related to each other, that are put on a line, as I mentioned before, but they are normally, like in our case, not longer than something like around 3 minutes. And it's a whole segment. It doesn't need additional videos if you don't like. So you have the possibility to learn in between, to take a small portion, and then if you have to do something else, to return 1 hour later or next day or something like this. And that way, with this strategy of microlearning, it's much easier to integrate this permanent learning process into your daily life without losing the track. That's the point. That's our
So beyond the maybe 40 hours per week of work we have, we try to get really some time in there where we learn, and maybe with this knowledge we are able to then like invest, make some more money, and then in future maybe don't need to work 40 hours, just 30, and then we have more time to learn again.
Yeah, that's the point. But
Mhm.
one shouldn't forget this, in this case, small micro chunks of videos. What's the function of videos? It's talking about certain aspects, in this case, of financing. So it's purely the transferring of information, and it won't help you. That's the reason why all these kind of video chunks or fragments, not fragments, but modules, are embedded in an environment where you have to train and to do it yourself. And the most important aspect is not watching videos. Doesn't matter if it's a pile of videos or in our case a line of videos. The main aspect where you really start developing competences based on information you receive in these videos and additional information. To try it yourself, paper trading, not with real money, to do certain exercises, because that's when you learn how to invest. You open your depot, you start investing with game money, so-called paper trading, and you see how it works. You see how you react. You see how you handle your emotions because you have no experience yet how you react in a certain investment environment. When stress is coming up, paper trading, you buy a share, next day it's down 5%. You ask why. You are happy because it's just paper trading and not real money. So you can also learn how you behave, who you are. And that's much more relevant than these videos on which everything is based. The videos give the hints, give you structure, tell you about the most important things, transfer structured knowledge about any important and relevant aspect of the financial aspect, and then you have to learn. And we can coach, we can, in a limited way, be mentor, but it's about yourself.
Very good. The classical learning by doing.
You could read thousands of books about oil painting, and then I tell you, okay, now you have finished your 3,000 books. You have a huge library at home in your living room, everything about oil painting and everything. You know everything. You can talk hours and hours and days, and then I tell you, okay, here, start painting. Please paint like Vincent van Gogh. And of course, it's clear for us, you will fail. And that's the difference. You have to train. And you have to learn. You have to read and you have to train. That's the best combination. Information, experience, training.
Sounds inspiring. Geld, in the past years, are there any new beliefs, habits, or behaviors that you have incorporated in your life? Learning habits or anything else?
Well, time is running out. What do I mean? As you mentioned, when I went to Frankfurt or when I started with my profession, something like this, you were born. I'm noting that the older you get, higher you have to value your time. So what I developed as an additional skill, or I improved this certain skill, is to organize time and to think twice what to do with my time. What's a waste of time and what's a relevant time. And it's the same with investing. I stopped reading all possible information about certain stocks or something like this. I try to focus as much as necessary, as few as possible, so to speak. And I try, and this is a permanent lifelong project, I try to keep out my emotions in investing as much as possible. And by the way, also in any other things I do, and to try to be as structured as possible without becoming a control freak or something like this. Again, structure, organization, and all these other important things as much as necessary, as few as possible. That's the thing I have been dealing with in the last couple of years, and the personal development. I think that's one of the most relevant aspects in my life. And I developed a more and more completely relaxed relationship to money. With money. That's also the point. You shouldn't take money too serious. Also, you try, of course, to increase, to perform with your portfolio and something like this. But it shouldn't be an obsession or something like this. You should see it in a very relaxed way.
Yeah.
It's a good, being relaxed is a good precondition to focus, to be concentrated, and again, not to become a victim of fear and greed and other aspects.
Yeah, I think I implemented this for myself. I see time itself as an asset, same like money. And actually, the work I do is for the time and less for the money. It's about like the time I spend into a project,
Yeah.
how much of it do I enjoy, and how much of it brings some outcome. Let's say something that I produce that other people then can benefit from. And then it's okay to work less if you have a high output, for example. And also when you feel ever like stuck and say, okay, this project is not moving forward, you can always like look at yourself as like, yeah, because I have done a lot of things that actually have not really helped this project. I have done all the other non-important things, but haven't tackled the really choosy ones. So I like that one. Like really prioritizing
Yeah.
time even over money also gives you the priority to focus on other things, right? Like family, pets.
Additional, this permanent daily work of staying as open-minded as possible,
Hmm.
getting even more open-minded. I think that's one of the core abilities or skills or whatsoever. In lifetime, That's what they say, and maybe this might be also sometimes my own experience. You develop more and more biases and mental cognitive self-restrictions,
Mhm.
and you permanently daily have to work to keep the gates open, the perception open, the cognition open, and open the gates even more. That helps in general, and of course it helps also in the financial market, because it supports you being skeptic in a constructive positive way, and not falling into traps of being influenced, or hope again, prognosis, wrong numbers, and all these things. And it also helps you in a social surround, of course. Because that moment you start thinking that everybody else is an idiot or something like this, one, a very lonely person, and two, stop learning from others, which was also a really important thing. The so-called swarm intelligence or something like this, as they call it. But you can learn from everyone,
Mhm.
definitely from everyone. And that's an additional segment of your lifelong learning and the necessity for lifelong learning.
It's a great one. Let's look at investments. What is the best investment you've ever made? Can be financial or not financial, whatever comes to your mind.
It's a simple answer. Investing into the development of my own competences about investing. That's the meta competence, and that's the meta asset, so to speak. Otherwise, everything is by accident. So, and one level lower, in a trivial way, the best investment I ever made is Tesla. It has been like this over years. Also, it's a roller coaster. The Tesla shares are roller coasters, but fortunately, I also trade with options about Tesla, so it helps survive. But it's definitely one of the most interesting companies with the most challenging, genius business models. And it has been like this within the last at least 6 to 7 years. But in future, with AI coming and robots and all this thing, it might be even more interesting. But this is not a recommendation, of course. It's just my experience. I know a lot of people do not like Tesla because they do not like Elon Musk. But I think one has to differentiate between a company and its founder and owner, main owner, or something like this. My experience in general, maybe assets or stocks from the US markets are definitely performing higher mid to long term than, for example, German financial markets, German companies or European companies.
Yeah, definitely some like Tesla, which are mostly traded on opinions, even though
Yes.
they have fundamentals that somebody could analyze, but it's all about the story and if somebody likes or dislikes the story.
Again, biases, political biases, social biases, whatsoever. Hearsay. A lot of people do not like Tesla based on hearsay. A lot of people like Tesla based on hearsay. And there's quite a few minority people that try to understand Tesla. And it's your decision if you think Elon Musk is I don't know, whatsoever, an evil person or a moron or a good person or whatsoever. It's your decision not to buy the stock. But in general, I think if you want to participate in the financial markets, and you look at Tesla as this example, and its very, very futuristic and sustainable concept of energy, renewable energy, then Tesla might be a little bit different as a company than, for example, some kind of weapon producing manufacturer. But it's an individual decision.
Yeah, we have discovered in the course also about like personal values and how you can define your personal values, and then you can even choose based on that as well, which stocks to choose or not to choose. And being aware of it, that if you buy an ETF that spreads across, you might have companies in there that you don't like. So many students appreciate that we cover this as well too. Where you mentioned before, like being self-aware about one's own decisions and values, and because it's important and give a company money to do something with it.
Yeah, that's a good point. Most people do not have in mind that that moment you buy a share, doesn't matter if it's one share or 10,000 shares, you become a shareholder of this company. You own a part of this company. And you always have to ask, from this point of view, do I want to own a part of this company? It's a really, really important aspect. And of course, investing is not only a financial act, it's somehow also a moral act. And the more important moral investing is for a single person, the more she or he should follow it. But it's clear that in a lot of cases, moral perspective and the performance perspective are not really strongly correlated to each other. That means sometimes you have to accept that if you have some kind of ESG moral approach towards your investing that you reduce your performance. And when it's okay, then it's okay. And it's okay if you decide, but you have to keep this in mind before you do it.
Good point. Thank you. If you think about a young person just being in university or about to really enter now the job market, what type of advice would you give that person and which ones should they ignore? I know you have in the brand university every 6 months people coming on the job market, but what would you give as an advice to someone coming out of fresh from university or school?
Again, not to follow patterns you adapted to, cliches, imaginations, or daydreams or something like this, but to follow your own path or to find your own path. And if you dream of becoming employee, for example, of a famous brand company or something like this, do it, collect some kind of experience. But in any case, as soon as possible, try to be as independent as possible. Because you should never forget, once you are an employee of a company, they're paying you most of the cases for your time. So you're wasting time. And in case this is a company making profit, you are not participating in this profit. The shareholders and the owners are participating in the profit. And this is not an optimal situation. So independent if you become an employee or if you get independent, at least mid to long term, always try to keep in mind that you have some kind of income situation, doesn't matter if you invest or if you work, where you are able to participate in your high performance and your success in a fair way. And normally, as an employee, maybe you get some additional incentives or something like this. But normally, and still nowadays, and especially in Europe, it's an unfair relationship. They pay you for your time, and the rest of the profit the shareholders take. And you should try to get rid of this within a company, as an employee, or as a future startup founder or entrepreneur or self-employed or whatsoever. Not everybody, again, knot diese Auton, not everybody is a startup founder. There are people that are completely good team players or fit into the management structure, the organizational structure of a company. But always try to become or to stay independent as much as possible.
Yeah, because what you want is that people are not just consumers, they should also turn into owners of things.
Yeah,
And
that's
owners not in the sense of like, yeah, I just collect like fancy bags. Maybe yes, if you try to really collect the best ones that you can later sell, but more of like, even if you don't want to be a startup founder, maybe you just start investing in the stocks market and you own parts of companies and then you can participate from it, that other people work and make more money and such. I think it's a really nice concept that, yeah, I also didn't think about before I opened my own company. I was afraid of it. I was like, oh, I'm not sure if I'm ready to have my own company, to take all of this responsibility. And I saw you can even be an owner of companies in fractional shares, so just in some parts, but just starting to invest. So that's
yeah.
actually
So
beautiful.
and here's the strong correlation. Taking your financial destiny, or whatsoever, destiny sounds good, into your own hands as much as possible, step by step, makes you rather independent from other people, from your working contract, from spending your time and dedicating your time to the owners of a certain company you work with or you work at. It's quite rare that this is a healthy relationship. So it's nothing nicer, for example, if you love working in companies as a based on a contract or something like this, or as an employee. Nevertheless, there's nothing nicer if you're doing this by free will and not as a necessity, as a financial material necessity. Like, I have to work, I hate my job, but I have to work because I have to pay the rent and all insurance and all this thing. And they have this pension and retirement insurance, and I know it's not enough when I retire, but nevertheless, it's quite safe. I feel safe and so forth. But the moment you have a second leg, so to speak, an income leg, a long-term leg, like investing in stock markets as an alternative to concrete gold or something like this, as they call it in Germany, buying an apartment or a house, you feel free and you have a free decision. You can stay at the company because you like it, and you can leave it because you don't like it. That's the point about money. You can manage your time, you can decide about your own time.
Mhm.
If you have a certain amount of money, the more money you have, the freer you can decide how to spend your time. And the less other people that paying you or what else can decide how you have to spend the time.
That's great life advice. Thank you so much, Gerald. Last question to you. Who should I invite next to this podcast?
People with alternative but nevertheless interesting access to statistics, probability trading, something like a, I don't know, for example, a poker player or something like this. Because why poker player? Because, there's a lot of people in the financial markets, neither investing nor trading, but just gaming. They behave like in a casino, playing roulette, chuck, chuck, chuck. But beyond this cliche of playing games and poker games, I think there's much more behind to, for example, being a professional poker player or something like this. It's a lot of science, concentration, and other aspects that are very rational and not by chance, but by calculation. So it would be nice to have some insights from a poker player or a similar person.
I have a good idea who I can interview on this point. Thanks for the input, and yeah, especially thank you for all your life advice. This is really valuable for myself, but definitely also for our listeners. Thanks again, Gerald, for sharing your expertise.
Thank you
Um,
for having me.
Really good. We will definitely do another session, maybe more deep dives. We'll see. Listeners, if this content sparked your curiosity, explore Investling's free online course on learn.investling.org for structured steps to reach your financial goals. Remember, this is financial education, not financial advice. And remember to subscribe to our channel below and keep learning with Investling.